Alright boys, as promised here, I'll do the workings out for you and post the accounts in as well as an attachment. Okay, so we're looking at, this was the 2012 company question 1 for West Limited. So the first working there, its stocks at the end of the year at cost was 81,200. So we're doing a working here for working 1 closing stock. Okay, this figure includes damaged stock which was 5,400, but which now has a realizable value of 2,300. So if you go 5,400 minus 2,300, that will give you a loss of 3,100. So we take the figure for closing stock, 81,200. Okay, and we can subtract that 3,100. Okay, and it gives us 78,100. Again, we can close these off at the end anyway, lads, and come back and tell you where these things go. Okay, working 2. Okay, patents. Okay, so let's have a look at patents here. It says patents which incorporate 3 months invested income are to be written off over a 4-year period commencing in 2011. So we go up to the 12 balance and we locate patents. Okay, and you see it down there, just about over a third of the way down there. Patents incorporating 3 months invested income is 20,400. Okay, so we know that figure there, lads, is wrong. Okay, so what we need to do is work out what 3 months investment income is. Okay, so we go and we find our investments. Okay, which is 4%, which we got of 300,000, which we received on the 1st, 2011. So it's going to be 4% times 300,000. Okay, by 3 over 12. Just do that in the calculator here, lads. So 300,000 by 4. Okay, is equal to 3,000 euro. So we add, go back up here to that 20,400 and we add back in that 3,000. Okay, now that will give us 23,400 for your patents figure. We want to write that off over 4 years. So 23,400 divided by 4 gives us 5,850. Okay, so that 5,850, lads, will go in as an admin expense. I'm not sure if closing stock is finished just yet, but if it, I'll leave it to the end. I can close it off just in case it's not. Okay, so then the patent in the balance sheet will be 23,400 minus the 5,850. Okay, 23,400 and 17,550. Okay, and as we know, that goes in then as your intangible assets in the balance sheet. Okay, next working I'm going to do is investment income. Okay, and rule of thumb, lads, is to have a little look down the rest of the question there in adjustments, particularly at VI, and see if there's any investments that you've received. I don't believe there is, but I'll have a quick look. No, we're good. Okay, so investment income, as we know from earlier on in the question, was 4% of 300,000. Okay, it's 12,000 euro. Okay, we've already received 3,000. Okay, so that means the 9,000 is due to us. So that 9,000 due to us is a current asset. Alright. Okay, again, lads, you can pause and rewind and fast forward with this. And if you have any questions, just send me an email or send me a message there on Edmodo. Alright. Okay, so that's patents taken care of. So moving on to suspense now. Okay, and we break suspense into two parts. Okay, so the first part there, an incorrect figure for debenture interest. So we've seen this plenty of times before. Okay, so it says that the incorrect figure for debenture interest, although the correct entry had been made in the bank account. Alright, so go up and look into your trial balance again. You can see there debenture interest for the first 4 months is 5,600. So this 5,600, okay, is a wrong figure. Alright, so what we need to do is we need to work out what 4 months debenture interest is. Okay, so 4 months of debenture interest would be equivalent to, we go back into your trial balance. Okay, look for your debentures, which is 9%. Okay, of 180,000. So it's 9% times 180,000 times 4 over 12. Okay, so 180 multiplied by 0.09. Okay, multiplied by 4 over 12 gives us 5,400. Okay, and that was the correct figure that went into the bank account. So you can see here that our debit side was up by 200. Okay, so let's move on to the B part of suspense. Right, and the B part of suspense then is discount allowed entered only in the discount account. So discount. Okay, if you're allowing discount, you're allowing it to your debtors. If you're receiving discount, you'll be getting it from your creditors. So discount allowed is a debit entry. Okay, so that 450 was entered only into your discount account. It was never entered into your debtor's account, which would be in a credit entry. So this means that your debit side is up by 450. Okay, which gives you a total suspense of debit side up, okay, by 650 euro. So the next working will be opening up working 5, is wherever the suspense was included or incorporated. You can see suspense is included there in salaries and general expenses. Okay, so take that figure, 194,300. Now, general expenses, by its very nature, is an expense within the debit column. So, if the debit side was up by 650, okay, they would have taken away 650 from salaries and general expenses. Therefore, to fix it, we must add it back on. Okay, so 194,300 plus 650 gives us 194,950, I believe. Okay. And as we know, salaries and general expenses is an admin expense. Okay. You know the way I prefer to do it? I'm going to go back now and I'm going to fix debenture interest. So, or finish it off, I should say. Okay, debenture interest. Okay, so debenture interest is 9% times 180,000. Just double check that we had it for the full year. Yeah, okay. So 9% per 180,000 is what, 510? I think it's 16,200, but I'll double check. Okay, 180,000 times 9% is 16,200. Okay, now we've already paid. Make sure now you take the figure that we corrected here, this figure here. Okay, 5,400. Okay, so we've already paid 5,400. Okay, which leaves us with 10,800. Alright, so this figure here, okay, we'll go into the bottom of the P&L. And this is debenture interest due, so it's a current liability. So let me go back up here for 1 sec. I don't think I finished investment incomes correctly yet. So this here, lads, obviously I forgot to mention is a gain. Okay, good stuff. Okay, next working then, working 7. Okay, is in regards to this here, the debtors. Okay, we need to fix that. Okay, as I forgot to do it. So we'll go down here and we'll open up debtors. Okay, go to your trial balance and locate your debtors. And you see their debtors is 98,400. Okay, and 98,400, lads, you can see is a debit entry. Okay, this over here was a credit entry, so it's reducing it. So come back down, we'll just take it away. Okay, how much was it? 450. Okay, now I don't know if that's going to be the only entry for debtors. I doubt it. Okay, but we'll leave it there like so, 97,950. And we can come back and adjust it if we need be, leave a little bit of space. Okay, next working there, lads, working 8. Okay, we've got the fire. Okay, during the year, stock, which had cost 5,000, was destroyed by fire, and the insurance company agreed to pay compensation of 4,000. The loss is to be treated as a separate item in the P&L account. Yeah, okay. So during the year, stock, which was cost 5,000, was destroyed by fire. Now, they've already made an adjustment for that. So we don't need to go into purchase and take away 5,000 from purchases. Okay? Or have they done it? Just check there. During the year, stock, which had cost 5,000, was destroyed by fire. Okay, so these have to be taken into account. Sorry, my apologies. So we open up purchases. Okay, and purchases here in this question is 1,140,000. And we subtract that 5,000. Okay, as a stock was burnt in a fire. Okay, the insurance company agreed to pay compensation. Now, it means agreed, which means we haven't received it yet. Okay, so this really isn't a working, but it's something that we need to bear in mind. Okay. Okay, insurance, 4,000. Okay, and that hasn't been received yet. Okay, therefore it's a current asset. Alright. Haven't closed off purchases yet, lads, because I have a sneaky feeling that there might be another adjustment with purchases. Again, it's not really a working, okay, but this is what you would call, I suppose, loss due to insurance. Okay, so loss on insurance. Okay, if you had stock that was worth 5,000 and you're only getting 4,000, well, then you have a loss of 1,000. All right, and that would go in to your admin expense, I suppose. Yeah. Okay. Okay. And that's that one taken care of. Now, moving on then to your next working. Okay, which is your depreciation working, which you're all hopefully quite good at this stage. All right. New page here. Okay, what working is this? All right, it's working 11. That's depreciation. That's on delivery vans, is it? Yeah. Okay, so let's have a look at what we kept. So delivery vans that cost 260,000. Okay, and we're getting rid of a vehicle which had cost 28,000, which which leaves us with 232,000. That's the 28,000 that we're getting rid of. Okay, and we're getting a new vehicle, which is going to cost us 54,000. Okay, the depreciation rate is 10%. Okay, so that's 23,200. Okay, multiplying these by 10%, but we almost also multiply them by the fraction of the year. And we're getting rid of them on the 31st of the 3rd, so by 3 over 12 and by 9 over 12. Okay, so we've got 28,000 multiplied by 10% is 2,800. Then multiply that by 3 over 12, which is €700. Then we've got 5,400 multiplied by 9 over 12, which is 4,050. Okay, add those three figures together, and you get 27,950. Okay, and that there is your selling and distribution expense for your depreciation on your delivery vans. Okay, next working then is to see if you made a profit or loss on disposal. Okay, so let's look at the dates. So you purchased this back on the 30th of 6th, 2005. Okay, and this was 28,000 by 10%, and you had it for 7, 8, 9, 10, 11, 12. Okay, so that's for half a year. Okay, so that's 2,800 divided by, we'll give you 1,400. Okay, so how many years did you have it in between then? You had it for 06, 07, maybe I get rid of it, 11, 08, 09, 10. And then we got rid of it on the 31st of the 3rd, 2011. So that's 1, 2, 3, 4, 5 years. Okay, which is 2,800 multiplied by 5, which is 14,000. Okay, and this we know was 28,000 by 10% by 2 over 12, which is 700. I did that right. Okay, 700. I'd add those figures together, and we get 16,100. Okay, so I suppose you can come over here and do it. So the cost of this vehicle was 28,000. Your accumulated depreciation was 16,100, which leaves you 11,900. Okay, they gave an allowance of 6,000. Okay, which means you've made a loss of 5,900. Okay, which is a selling and distribution expense. All right. Okay. Working 13. Okay, delivery vans. And the balance sheet. Okay, let's look at cost first. Then look at depreciation. Okay, the cost of these vehicles at the beginning of the year was 260. You got rid of a vehicle that was worth 28,000, and then you got a vehicle that was worth 54,000. Okay. Okay, so that's 286,000. Your accumulated depreciation, okay, was the difference between 260 there in brackets beside delivery vans and the 180,000 in the debit column of trial balance, which is 80,000. Okay, we're going to get rid of the depreciation, okay, of 16,100 there. As you get rid of a vehicle, the depreciation goes with it. But we must add, okay, the 27950 there. for this year's. Okay, so that's 80,000 minus 16,000 plus 27,950 gives us 91,950. And as we know, it's in the heading, but just to reiterate, that goes into the balance sheet. Okay. Now don't forget, we must go back to purchases here. Okay. And we're going to have to take away, okay, the check for the net amount of this transaction was incorrectly treated as a purchase of trading stock. So you got allowance of 6,000, the vehicle cost you 54,000, therefore you wrote a check for 48,000. Again, I don't know if that's the last purchase working, so we'll leave it open for the time being. Okay, moving on. So the bank reconciliation statement. So working 14. Okay, so we've got our own bank account versus the bank statement. Okay, so our own bank, if you look in there, it's about 2/3 of the way down. It's 33,000. Yeah, and it's in the credit column, so therefore we have an overdraft. Okay, and the bank statement revealed an overdraft of 31,280. Okay, and the first thing it says here, a check for 640 issued to a supplier had been entered in the books as 460. So we must take away the difference from the bank. Okay, so the difference there is 640 minus 460 gives you a difference of 180. That's going to increase your overdraft, obviously, and we must do the working on that also. A credit transfer of 900 had been paid directly into the firm's bank account on behalf of a debtor who has recently been declared bankrupt. And this represents 30% or 30 cents in zero. Okay, so a credit transfer of 900, okay, is a positive. Okay, and this is going to require work as well, as we've got a bad debt to consider. And the last thing then is a check for €1,000 had not been presented for payment yet. So that's going to increase the bank statement overdraft. So we've got 33,000. Okay, minus another 80. Okay, so that gives us 32,280. And obviously this gives us 32,280 also. Okay, so that gives us our bank, which is a bank overdraft, which is a current liability. Okay, so the first work we need to fix there is that €180 that we issue to supplier. So the supplier is obviously a creditor. Okay, so we take the creditor figure from the trial balance, which is 82,200. Okay, and because it's money that we didn't think we'd paid off, that means we're reducing this by an additional 180. Okay, which gives us 82,020. I know that's the last one there for creditors, so that there goes in as a current liability in your balance sheet. Okay, so that's that one taken care of. Then we can open up working 16. Well, actually we have debtors already opened, but we'll do bad debt first. Okay, so we've incurred a bad debt here. So we've received 900 quid, and this represents 30 cents. Alright, or 30% of the total debt. So 900 divided by 30. Okay, multiplied by 100 gives us 3 grand of a debt. Okay, and they've paid us 900 of that 3 grand, which means the bad debt is 1,000 or €2,100. Just write that out for if you want. Okay, so 900 divided by 30 multiplied by 100 equals €3,000. But they've already paid us 900 quid, so the bad debt is 2,100. Okay, that's your bad debt there. And as you know, that's a selling and distribution expense. Okay, now, in addition to that is we need to go back to our debtors. Where was it? There it is, debtors, okay. And now we need to subtract again from our debtors. Okay, so we're going to minus the 900 that we've received, okay, plus the 2,100, which is the total debt of 3,000. Okay, and that will give us 94,950. And that's debtors finished. Okay, that's the current asset in the balance sheet. All right. Okay, so that's that taken care of. Okay, we've got a little work in here for advertising. So working 17. So the advertisement payment is for an 18-month campaign which began on the 1st of the 10th, 2011. Okay, now remember this is for the year 2011 ending the 31st to 12th. So if we began this campaign on the 1st of November, it means that we're only taking payment or an expense for 2 months for this year. Okay, so we go back up and we have a look at advertising, which is the second one from the bottom there, and it's 4,800. Okay. Now, it is for an 18-month campaign, so let's divide it by 18. Okay, it gives you decimals, so let's multiply it by 2. Okay, it still gives you decimals. It's unusual. Okay, but the decimal there is €533.33. Let me just see there for a sec. 4,800 divided by 18, if I multiply it by 16. Oh, excuse me. My apologies, lads. My apologies. Once again, made a mistake with the months. Okay. So, it's by 3 months, isn't it? Yes, because it's the 10th, which is October, November, December. So 3 months. My apologies, guys. Okay. So it's 4,800 divided by 18 multiplied by 3 is 800 quid. That makes more sense. Okay, so that €800, lads, okay, is it's in selling and distribution expense because it's advertising. Okay, for the year. All right. And then your 4,800 less your 800 is equal to 4,000. Okay, and that 4,000 is an expense prepaid. An expense prepaid is a current asset. Okay. That's that. Okay, then VIII, the directors recommend that provision be made for both investment income and debenture interest due, which is done. Okay. Provision for bad debts to be adjusted. Okay, so or Canadian here, just move it over here. Okay, so provisions for bad debts. Okay, so it's to be 4% of debtors. Okay, and we'll go back up here and locate debtors. Debtors is now 94,950. So 94,950. 94,950. Okay, so your new provision is 94,950 by 4%. Gives you 3,798. Okay. Now, if you go back and look then for your old provision. Okay, in your old provision, where is it? There's bad debts provision is 3,000. Okay. Well, first of all, we know this is going to go into the balance sheet when we take it away from our debtors. Okay. And then the old provision was 3,000. The new provision is now 3,798, which is an increase of 798. So if it's an increase, it's an expense also. Okay, and this is also a selling and distribution expense. All right. And the last thing then is buildings to be depreciated by 2% of cost, and I'll squeeze that in here. So working 19 and depreciation of buildings. Okay, very simply was just 2% of cost. So it's 800,000. Okay. Yeah, 16,000. Okay, And that obviously goes into your admin expense. You must also take it away then in your balance sheet as well also. Okay, let's make sure now I have everything closed off. I know I don't have the first few closed off, so we'll go back to that. So closing stock. Close it off. Trading. Current asset. Okay, patents is done. Investment income is done. Okay. Yeah, that's all. Debtors is done. Purchases. Must finish off purchases. Okay, so 140 minus 53 is 87. So 1,087,000. Okay, that's going to go into your trading account. And I think that's all of them taken care of. Yeah. Okay, boys. All right. Hope you find that helpful. I've posted another question there for you, so give that a rattle, and I'll put up the solutions for you again later on in the week. Okay.